Hi, this is Georgiana Fung of Cirrus Research. Here were some quick highlights from our Regional Outliers report that was just released. This report comes full circle on the themes that we have flagged in our global reports previously on risk metrics and portfolio positioning. So in this report, we look across 10 key markets and 14 sectors to come up with some salient themes for the global landscape. So one of the biggest takeaway is summarized in the title, which is that trending factors should work. And this goes back to our risk metrics report, where we found that market crowding is not a concern. So how we measure that is using the valuation of trending stocks. So if investors are all piled up in a few names, that's a risk for the market. And if you look at Europe, where some of these trending stocks are driven by financials, their valuations are actually discounted. So here you'll see financials valuations using price to book, overlaid with credit risk, which is represented by high yield credit spreads. And what you see is that high yield spreads were actually pretty high last year in mid-2022, and it has come down substantially since. Meanwhile, we've seen a rebound, quite a significant rebound in price to book value for financials. Currently, they're trading at 0.9 in price to book. And if you look at this data point in context to the historical data that we see, here it's going back to 2009. But if you look back to 2003, the current valuation is actually pretty low compared to historical standards. So what we see is that trending stocks are undervalued, financials are undervalued, and there is an improvement in credit risk in Europe. And that leads to upside, we think, for the financial sector. Now, the other key takeaway is that we continue to find materials attractive across the global landscape. And this really fits into our house view of a long commodity cycle where prices will remain high for commodities. And if you look at this chart, we have valuation on the y-axis. So inexpensive ones are on the lower quadrant here. And pessimistic expectations are in this quadrant as well. So over here, we measure expectations from sell side. So right now, we're in the zone where valuations are attractive for materials, and also expectations are very bearish, which means that the hurdle rates are lower, which means that earnings reporting in the quarters to come can be quite resilient, we would say, compared to expectations. To tie it back to the valuation matrix that we regularly publish, we overlay valuations with sectors that have the most bearish expectations to come up with areas where we could potentially see attractive entry points. And what you see is that materials come up with a lot of greens and a lot of green dots, meaning that they have a positive outlook. Those are the key highlights from our report. For the details, please visit our website for access to the full report. For any questions, please feel free to contact us. Thank you.